Welcome back to the Pesa Forever channel. If you've been following the markets lately, you might have noticed that real estate is suddenly the hottest topic in the group chat again. But wait, I'm not talking about buying a flat in Mumbai or a plot of land that you have to fence off to keep people out. I'm talking about REITs.
Exactly. Real estate investment trusts. It's arguably the most exciting sector in the Indian market right now as we kick off 2026.
It really feels that way, but honestly, for a lot of us, it still feels a bit complex. I see the headlines, but I'm not sure I grasp the magnitude. So today, we are doing a deep dive into the 2026 landscape. We have 10 massive updates to get through.
We do, and honestly, the landscape has changed completely in just the last few months.
Let's jump right in then. The biggest news seems to be coming from the regulator. I heard SEBI made a move that changes everything.
They absolutely did. This is our point number one, and it is a game changer. Effective January 1st, 2026, SEBI officially reclassified REITs as equity-related instruments.
Okay, equity-related instruments. That sounds fancy, but what does it actually mean for a regular investor like me?
It's huge for liquidity. Previously, REITs were in a bit of a gray area for institutional investors. But with this classification, SEBI has allowed mutual fund schemes to increase their exposure to REITs from 10% of their net asset value up to 20%.
Whoa, wait. So you're saying mutual funds can now buy double the amount of REITs they used to?
Precisely. That means a massive wall of institutional money, your SIP money essentially, can now flow into these real estate trusts. It validates the asset class and stabilizes the prices.
That is massive. It feels like the training wheels are finally off. So who are these players? I feel like a few years ago there were only one or two.
That brings us to point number two, the maturity of the Big Five. The market isn't experimental anymore. It is anchored by five major listed vehicles. You have the veterans, Embassy Office Parks, Mindspace Business Parks, Brookfield India, and Nexus Select.
And there's a new one, right? I feel like I missed an IPO recently.
You probably did. The newest leader is Knowledge Realty Trust, which listed back in August 2025. So now we have a solid basket of five diverse options. It's a fully formed sector now.
It's crazy how fast that happened. But let's talk about why we invest. Show me the money. Are these things actually paying out?
They are breaking records. Point number three is all about the payouts. We just got the data for Q2 of FY26. Collectively, these listed REITs distributed over 2,331 crore rupees.
2,331 crores in one quarter?
In one quarter, that went out to more than 3.3 lakh unit holders. If you look at the year-on-year growth, total distributions are up nearly 70%.
70% growth is unheard of. But wait, I have to play devil's advocate here. This brings me to a myth I hear a lot. People tell me, oh, just put money in a REIT. It's like a fixed deposit, guaranteed monthly income. Is that true?
I am so glad you brought that up. That is myth number one regarding income. REIT dividends are not guaranteed fixed income.
They aren't?
No, while SEBI mandates that they must distribute at least 90% of their taxable income to you, the amount of that income can fluctuate. It depends on occupancy, rental collections, and the economy. If tenants leave, the payout drops. It is not a bank FD.
Okay, that is a crucial distinction. So for the payout to be high, they need tenants. Who is renting all this space? I keep hearing that work from home is killing offices.
That is the narrative, but the data says otherwise, largely thanks to point number four, the expansion of Global Capability Centers or GCCs.
GCCs? These are like the back offices for big global companies, right?
Basically, yes, but they are becoming front offices now, high-tech R&D centers. They have become the primary demand driver for Indian office space. We are projecting occupied office space to hit 300 million square feet by 2027.
300 million! That's a lot of cubicles.
It is, and it's heavily concentrated. If you're looking at where the growth is, look at Bengaluru and Hyderabad. That's where the GCCs are setting up shop.
Fascinating. So the big tech companies are renting from the big five REITs. But I have another concern. A friend of mine told me REITs are cool, but they're only for the super wealthy. Is that true? Do I need crores to enter this market?
That is myth number 2. REITs are for the rich. It is completely false for the public markets. You can buy a unit of a listed REIT for anywhere between 300 to 400 rupees roughly, depending on the price. It's just like buying a share of Tata Motors or Reliance.
Okay, so 300 rupees is definitely affordable. But I've been hearing about this other thing, SM REITs, small and medium REITs. Is that different?
Yes, and this is point number 5, the rise of SM REITs. This framework has really matured in 2026. We now have 6 registered entities.
How is an SM REIT different from the big five we just talked about?
The Big Five own massive tech parks. SM REITs allow fractional ownership of smaller, specific Grade A assets, maybe a single premium office building or a commercial space. However, the ticket size here is higher. The minimum investment is 10 lakh rupees.
Ah, okay. So the big five are for everyone, 300 rupees entry. SM REITs are for the slightly more serious investor, 10 lakh entry.
Exactly, but even 10 lakhs is way cheaper than buying a whole property, right?
True, that actually leads to another myth. People think investing in a REIT is the same as buying a house, like I own the brick and mortar.
It is very different. That is myth number 3. When you buy a house, you deal with leaks, tenants not paying rent and painting walls. When you buy a REIT, you are buying a financial instrument. It is liquid. You can sell it on the stock exchange in seconds. You have professional management handling the leaks.
I do hate dealing with plumbers, so that sounds like a win. Moving on to point number 6. We talked about offices, but what about malls? I went to the mall last weekend and it was packed.
You are seeing the trend live. Point 6 is retail REITs catching the consumption wave. We only have one listed retail REIT right now, Nexus Select Trust.
And how are they doing?
In Q2 of FY26, they reported a 16% surge in tenant sales. That's huge. It's driven by fashion, jewelry, and entertainment. People are revenge spending, and the REIT investors are collecting the rent from those shops.
I love that. Spending money at the mall and then getting some of it back via my portfolio. Now, what about the stuff we buy online? It has to be stored somewhere, right?
That brings us to the new frontier. Point number 7, industrial and logistics. You know how big e-commerce is. Well, in late December 2025, Blackstone-backed Horizon Industrial Parks filed for a 2,600 crore rupee IPO.
Oh, so we are finally getting a pure play logistics REIT?
It's effectively the institutionalization of industrial platforms, warehouses, factories. This is the next big growth engine. It's not just offices and malls anymore.
That's good for diversification. Now let's zoom out a bit. The economy. I know interest rates have been a headache for years. What's the situation now in 2026?
This is the tailwind everyone was waiting for. Point number 8, monetary easing. The RBI has been cutting rates. Since January 2025, they have cut interest rates by a cumulative 125 basis points.
Break that down for me. Why is a rate cut good for a REIT?
2 reasons. First, REITs carry debt. Lower interest means lower interest payments, so more profit is left for you. Second, when bank FD rates go down, the dividend yield from a REIT looks much more attractive, so more people buy, pushing the stock price up.
It's a double win. Okay, now comes the part I've been dreading. Point number 9. Taxes. I've heard REIT taxation is messy.
Messy is a polite way to put it. It is complex. See, when you get that payout distribution, it's not just one lump sum. It's usually split into 3 buckets: interest, dividends, and repayment of capital.
And they're all taxed differently?
Yes, interest is usually taxed at your slab rate. Dividends might be tax-free depending on the REIT structure or taxable, and repayment of capital reduces your acquisition cost, which impacts capital gains later.
Oof, okay.
And if you're an NRI, the rules change again regarding TDS. So point number 9 is, don't just look at the yield, look at the post-tax yield. You might need a CA to help you read your statement.
Noted. Check with the accountant. Let's finish on a high note. Point number 10. We hear a lot about green energy and sustainability. Do real estate giants actually care, or is it just marketing?
In the REIT space, they actually have to care because their tenants, those big global companies, they demand it. Point 10 is sustainability and ESG leadership.
Give me an example.
Look at Embassy or Brookfield. They have achieved 5-star GRESB ratings. That's the global standard for real estate sustainability. They aren't just planting trees. They are committing to net zero emissions by 2030. They are running massive solar parks to power their buildings.
That is actually impressive. It's good to know my investment isn't just concrete and pollution.
Exactly, it's sustainable growth.
Wow, so to recap, the government is backing it with SEBI changes, the big five are maturing and paying out record cash, we have new sectors like logistics coming in, and interest rates are falling, which boosts the whole thing.
That is the perfect summary. The ecosystem in 2026 is robust. It's no longer an alternative investment, it's becoming a core part of the portfolio.
But, caveat emptor, watch out for the tax complexity and remember dividends aren't guaranteed.
Always do your due diligence.
This has been incredibly helpful. I feel like I finally understand why everyone is talking about this. Thank you so much for breaking it down.
My pleasure. It's an exciting time for Indian infrastructure.
If you guys found this helpful, hit that subscribe button. Let us know in the comments, are you betting on offices, malls, or waiting for that warehouse IPO? We'll see you in the next video.
Disclaimer: this video is for informational purposes only and does not constitute financial advice. The market involves risk, so please conduct your own research before investing.